Hello everyone, welcome back to Inspire Education. So today actually we'll be discussing the purchase and sale of goods. Okay, both on cash and credit basis. Okay, both the things we'll be discussing. Okay, before that let's see the golden rule of the warranty system. Okay, because this rule will be applied on the particular transactions. So before starting the class, let's see the golden rule of double entry system. So there are basically three types of accounts: personal account, real account, and nominal account. So there is a basic question in your mind that what is personal account? So see, the personal account is nothing but it is the say for example any person, okay, Sachin, Saurav, okay, Anil, Vimal, anyone, or it may be any company. So any kind of company, any hospital, any school, it may whatever it may be, means person may be a natural person or it may be artificial person. Okay, so any name or organization name, these things are coming under the purview of personal account. Okay, then comes real account. What is the real account? Real account means anything which is real. Real means what you can touch and you can feel. Suppose a printer, a computer, okay, land and building, machinery, mobile phone, laptop, all these things are real account. Means which can be touched and seen. Okay. In few cases, there are something which cannot be touched and felt. Still, those things are counted under real account. But mostly, you can say the things which can be seen and touched are coming under real account. Okay. Next comes the nominal account. What is the nominal account? Nominal account means which neither belong to personal account nor real account. Means to be specific, all incomes or gains or expenses, losses, discounts, all these things are coming under nominal account. Means suppose discount received. Okay, you cannot see the discount receipt. You can suppose wages paid. So those things are not actually real account, neither real account nor personal account. But those things are actually what? Expenses, either expenses or incomes. So these things are classified in this way: personal, real, nominal. So how to debit or credit? So in the golden rule, we'll understand how to identify a transaction or a particular entry, whether it will be debit or credit. So for making these things understandable, okay, this rule is framed. So what is the rule? For personal account, whenever there is an account you have identified, it is personal, then this rule will be followed. What is the rule? Debit the receiver. Okay, debit the receiver. Next, credit the giver. Means if any account, whether it is a person or a company, anything, if that person or that company is a receiver, then we'll debit that account. Okay, and if that person or the company is a giver, then we will simply credit the account. This is the rule. Next, for a real account, the rule is debit what comes in. Okay, for real account, don't think that debit the receiver, because that particular debit the receiver and credit the giver is applicable if the type of account is what? Personal account. And for real account, debit what comes in, credit what goes out. Okay, this is the rule. For nominal account, expenses and losses are what? Debit. And incomes and gains are credit. So this is the rule. Some of you might be knowing these things, I know, but for those who have started late, and for them, I am just discussing these things again. So for personal account, this particular rule will be applicable. Okay, debit the receiver, credit the giver. And for real account, debit what comes in, credit what comes out. This will be applicable. For nominal account, this particular rule will be applicable. Okay, I think it is clear. So let's move on to the journal entries of cash purchase. So first transaction here is given: purchased goods for rupees 2 lakhs. Okay, so you can see here purchase goods is given, no? and for rupees 2 lakhs. Means what? There is always two accounts affected. Okay. In every transaction, there must be two or more accounts involved. So here, two accounts are what? First is a goods account or purchase account. You can say goods are classified either purchase, sales, okay, or it may be purchase return or sales return. So, but here purchase is given. So purchase is there, and there is the cash. Nothing is mentioned, so it is cash. For rupees, this is cash. So basically, there are two accounts are involved. What are those things? Purchase and cash. Now, purchase is what type of account? A real account. How? Yes, this is a goods, no? Purchase of goods. So for real account, what is the rule? So for real account, this rule is applicable. This particular real account. Okay. Don't get confused about personal and nominal. Here, purchase means goods purchase. Goods means you can see and touch the goods. So that's why this is the real account. Next, we'll identify the cash. What type of account cash is? Cash is also real account. Why? Because we can touch and see the cash. That's why these are the real accounts. Means in both the cases, the rule of this debit what comes in and credit what goes out, this rule will be applicable, isn't it? Now, purchase, whenever we purchase something, what happens? We generally receive goods, no? Means goods comes in. So in this case, real purchase, we have identified it is a real account and goods comes in. When we purchase, means goods comes in. And we purchase goods by paying cash, so naturally cash goes out. I think now it is clear which account will be debited and which one will be credited. So comes in is means debit comes in, and for goes out it will be credit. So this is the overall scenario of this particular transaction. Next, I will show you how to post these things in journal. I have already uploaded how to draw the journal. So you can see this is the standard journal format. Okay, yeah, date column is there, particulars, ledger, folio, debit, credit, all these things are there, amount. So this is the journal in the books of Ashwini Vaishnav. So hypothetically, it is the books of account of Ashwini Vaishnav, whose account we are preparing. Okay. Next is the dates. February 20. Okay. So purchase debit, already we have discussed the purchase account is debited and for rupees 2 lakhs and cash is a credit. So this way, this is the journal entry. So we will simply write D goods purchased in cash. So this is the one journal entry. Similarly, we will be posting in the journal. There is a book journal. Next, purchase goods from Nitin by paying cash. So what are the accounts involved? See, purchase goods, purchase account is there, Nitin is there, cash is there. So what are the two accounts or three accounts we will be considering? See, whenever we purchase anything or sell goods or anything, if it is in cash, then the name is not important. This name need not be recorded in account. Okay, because Nitin has paid cash. Okay, even if we do not record his name, it doesn't matter. Means here again purchase and cash is relevant. Okay, Nitin name is not important. It will be relevant when purchase transaction is made on credit. Okay, so again purchase is what? Real account. So this is the rule. You can see real for real account, which will be applicable. This is the rule. For debit what comes in and credit what goes out. Similarly, cash will be going out. So real account comes in, real account, this one cash will be going out, goes out. So debit what comes in, credit what goes out. So again purchase to cash. So this is the journal entry. Simply you can write Being goods purchased sufficient in cash. From Nitin, you can write or you can skip the name also, no problem. But in account, you have to mention the cash because Nitin name is not required because we have received the cash. Account is already closed. Next comes the important one. Purchase goods from Nirmala and Company on credit. So, from Nirmala and Company we have purchased goods. That means what? We have not paid any cash. Okay, we have not paid any cash. So in this case, we are receiving goods, no? So goods is important and cash is not involved, but we have to record the Nirmala and Company. Okay, see the transaction. Purchase Nirmala and Company. Okay, first of all, you have to understand what accounts are important for recording. Because here no cash is there. This is just the value. This is the value amount. Okay, this is the means we have purchased goods of value 90,000. Okay, we have not paid anything. So there are two accounts. This is a goods or purchase account. You can say on Nirmala and Company. These are the two things. Purchase is what means purchase of goods. Okay, goods is real account. Nirmala and Company is what? Nirmala and Company, it's a company. Means Nirmala and Company is what? Purchase account. So for real account, this rule will be applicable now. Real debit what comes in, credit what goes out. And for Nirmala and Company, personal account rule will be applicable. See, purchase what comes in means good. When we're purchasing something, we are receiving, no? Goods comes in. And for personal account, what rule will be applicable? Either receiver or giver. Means we have purchased goods from Nirmala. Means Nirmala is what? Giver. And we are the receiver. But here Nirmala is what? Giver. So for comes in, debit what comes in, and for giver, personal account, credit. So simply purchase account will be debit to Nirmala and Company. See, this way we'll be writing purchase to Nirmala and Company. So now we'll see the sales transactions. Okay, I have discussed the purchase transactions. Now we'll be seeing the sales transactions. See, there is the transaction sold goods for rupees 50,000. Means this transaction is for cash. So basically there are two transactions, two accounts involved. What are the accounts? First is the goods and cash. Okay, first is the cash and sales, you can say, or you can write interchangeably, no problem. But the thing is that identification. So here goods. So first goods or sales, whatever you want to write, you can write, no problem. And the cash. So cash is what type of account? Means we can see and we can touch cash. So it is the real account. Next, sales are goods. Okay, so it is goods. It is also having a physical existence. Means goods. This is not sales. Okay, sales means sale of goods. Okay, so it is also classified as real account. Next is the rule. Will apply the rule for real account. This rule will be applied when we sell something. We sell goods and we receive cash. Means cash comes in. No, so cash comes in. And for sales, what is the rule? Same, it is the real account, and now it goes out. That means it is credit and cash is debit and goes out, so it will be credit. So the journal entry goes like this. Okay, date. Okay, everything is there, and after that cash debit 50,000 to sales account 50,000 being goods sold in cash. So this is the journal entry. Okay, next, sold goods to Sharma and Company for cash. So here you will see there are goods is there, Sharma and Company is there, and cash is there. Three accounts are there. So out of these three, which two account will be taken into account. See, sold goods to Sharma & Company for cash. That means what? We have received cash. So if we do not record even Sharma & Company, it will not affect our financial position. Okay. So we are receiving cash by selling goods. So goods and cash will be recorded. See, cash and sales. Sales plus goods. Okay. Cash is what type of account? Real account. Goods is also real account. So this particular rule again be applicable. Okay. Debit what comes in, credit what goes out. So when we sell goods, we receive cash, means it comes in. Okay, comes in. And for sales or goods we are selling, so goods will go out, goes out. For comes in, it is debit. For goes out, it is credit. So this is the identification of accounts. Simply now we will pass the journal entry like this: cash account debit to sales account. See, have a look. Cash account debit to sales account. So this is the journal entry. So at last narration will be passed: being goods sold to Sharma & Company in cash. Even if we do not record Sharma & Company, no problem, because we have received cash. But it is recommended if you record the name of the customer also, then if you search in future, then you can at least get the name of the customer in narration, from the narration. Okay, this is the journal entry of sales. Next, sold goods to Rajnikant and Company on credit, 1,80,000. Same here, but the thing is that now situation has changed a little bit. How? We have sold goods account is there to Rajnikant on credit. That means what? Cash is not involved now. Means we do not have cash to record, because we have sold the goods, and it is on credit. The transaction is on credit. So we have to record the name of the customer. Okay. So Rajnikant and Company will record, and the sales means the goods. The Rajnikant is what? Personal account. Rajnikant is what? Personal account. So for personal account, which rule will be applicable? This particular rule will be applicable. We have sold goods. So when we sell goods to our customers, customer is what? Customer is the receiver, isn't it? Customer is the receiver. And goods is as usual what type of account? Real account. So since personal account and it is the receiver and it's real account, so we are selling goods. So what will happen? It will go out, isn't it? Next, if Rajnikant is what? Receiver, then we will debit the account of Rajnikant. Then sales account will be credited. Why? Because it goes out. So the final entry is like this: Rajnikant and Company debit to sales account, and amount will be equal. There will be equal debit and credit. Okay. Being goods sold to Rajnikant and Company on credit, it has to be recorded. So this is the journal entry. So for purchase, cash purchase, you can record the transactions, okay, in the manner we have described, and sales also you will be recording the transactions this way. Okay, this much is for now. In the next video we will be discussing the ledgers and other things. Thank you.